Ladies and gentlemen, we're live, and as I speak right now, we're seeing, some of the most volatile markets we've seen in quite some time. From my understanding, we've even got a record drop in terms of market cap. I think NVIDIA lost at its peak some 500 billion in market cap, which has never been done before, and it's larger than something like 98% of the entire stock market. Just that drop alone. But lucky for all of you, we're back with another epic show of TradingView and TradeStation. And with me is their global head of market strategy, David Russell. As you all know, my favorite thing about this show is that David runs the TradeStation account as well as TradingView. So you're getting this wonderful dual access into markets with this live show, and you can follow his research, which he's publishing. I just don't know, where else you can get that level of direct access to someone who knows markets as well as him. Before we dive into this show, we've got a lot to talk about with what's going on. Let me just remind you all that this show is sponsored by TradeStation. TradeStation pursues a singular vision to offer the ultimate online trading platform and services for self-directed traders and investors across the equities, equity index options, futures, and futures options markets. Equities options, and commodity futures products and services are offered by TradeStation Securities Inc., member NYSE, FINRA, CME, and SIPC. Let me get the mic over to David right away because markets are moving. This is kind of a historic day in some regards. So go for it. Take the mic away, David.
It's great to see you, Steph. Well, yeah. So basically, I think we have one of the strangest days I can think of, and in terms of this one, Chinese product that I don't even know if it has any very much revenue in the United States or anything else. Probably a product with a very small, probably a few $1 million. I don't know how many of American revenue are suddenly, erasing trillions of dollars probably in the overall market, but. It's an unusual sort of thing, but I think we also have to look with the S&P to start and to recognize that there are, essentially patterns here that are, still not overly bearish. So look at the S&P. This is a weekly chart of the S&P, and we have a falling trend line. And what's interesting about this is that we hit it, we closed at a high last week, and now we're coming back to hold the trend line. There's also a 50% retracement. Where'd it go? If you look, basically, from the Friday close here. Actually, I have it on this other chart. I have a daily chart as well of the S&P here, and I have the 50% retracement on there. And what's interesting about this, you can see it on the daily chart. We're holding a 50% retracement of this move. We're holding the 50-day moving average. We're also there's also the 21-day exponential is there. And one of the levels that I've been kind of really watching was this level here at 59.33, which was the low on December 27th. You can see how it then became resistance for a while. And I think this is kind of recently probably the more important sort of closing price to look at. So that I think is interesting. We also have this level here. I'm not sure if that is as important, but it's from early in January. But from my view here, what's interesting is we're holding a 50% retracement. We're holding above 59.33, and we're also holding above this falling trend line. So those things, I put them all together, and it does give me a sense here that we have a very bullish thrust here that is definitely is taking a hit, but it is just showing signs of it overall being strong. What's also interesting, last week, in the last 2 weeks, right before the CPI data came out, we had the most negative reading on sentiment from the American Association of Individual Investors, the most negative reading and the least bullish reading on their survey since November of 2023. Then it had the biggest flip to bullish and the biggest drop of bearish since also November of 2023. So we're looking back to that moment when the market started rallying right here. We have certain gauges of sentiment going back to extremes from that level. Then we also have the 10-year Treasury yield on this chart. We look at this chart a lot, Steph, but basically also a level here from November of 2023 that we went back up and did not hold. So now we're in this spot of the 10-year Treasury yield essentially potentially having peaked and kind of drifting here. So I think we're at a spot where, yes, the semiconductors have taken a beating. Yes, you can question the valuation and a lot of the assumptions we have baked in, but at the same time, there are things in place that remain not totally negative for the overall S&P 500. So I think it's important because what we seem to be seeing now is a rotation away from large cap growth, not surprisingly. It is somewhat historic. And then the question is this maybe what the flavor of 2025 looks like? Is 2025 maybe a year of the value of financials, of healthcare, and less of a year of tech and of growth? But I'd also just mention that, communications are not doing terribly. Communication stocks, Meta hit a new all-time high today. So I think in many ways, we like to talk about big cap tech and mega caps and all that. It's important to realize that names like Meta and Alphabet are not tech stocks. They're communication stocks, in the communications sector, if we actually look over here, has this downtrend line that it's holding above. So from my perspective here, in many ways, this is a tech story, this is a semiconductor story, and it's also a story that impacts a certain number of tech stocks that had that clear AI exposure.
David, there is so much to unpack there, especially around the aspect actually of the S&P 500 chart that you were just showing. And I just want to start with that because, okay, this is, all of my social feeds are talking about the drop in NVIDIA and what's going on. And when you look at that chart of the S&P 500, it's like, what are we back to the same levels as a week and a half ago, 2 weeks ago? So
Yeah.
it's so interesting just to get that perspective when you zoom out that it's not nearly as, depending on, how you're investing or trading, it's not nearly as massive at day as you think, broad market. And then, of course, you mentioned the aspect about communication stocks, and I looked at the Meta chart, and that's interesting. It did hit an all-time high today. That's fascinating. And it looks like, if I'm looking at this right, it like really dipped. It's really, right now it's bouncing off the bottom in an unbelievable, like a fairly epic way. It hit those panic lows and it's coming back. And to add your communications aspect, I just saw AT&T is at 4-year high. So we've got all this drama around AI. And meanwhile, some of these like sleepers are just, it's almost like, everyone's looking this way when they actually should be looking at the really interesting moves going on that they're maybe missing.
MasterCard, Visa, Bristol Myers.
Is that Visa at all-time highs today?
Yep.
Incredible.
So I'll show you something else.
Incredible.
Who knows this chart? What could this be? It's the Dow. The Dow Jones Industrial Average is up today 0.3% with the overall market down. It held a 50%. If you just look at not even 50% retracement, if you look at last week's candle, well, it's probably similar to doing the Friday to Friday. But the key thing is it also held a 50% retracement. If we look at the Dow here and we go, let's just stick with the method of going starting on the Friday, which would be this candle right here. That's the Friday. And if we go from the Friday close to the high, then that's not, I'm looking at the wrong. This is why I use weekly charts for some stuff. This is basically the Friday close that we want to look at. It held that 50% right there at right above 44,000. So again, very tight. And I think it also is kind of consistent. It shows exactly what is, to me, very interesting to see that the Dow Jones Industrial Average is doing so well here.
That is also something I caught today. Was I was looking at the market open this morning and I saw the Dow was holding up relative to the NASDAQ 100 and S&P 500. And one interesting thing I want to bring up about that, especially because you were already showing prior to this, to our chat, you were showing me some charts of the semiconductors. And I just found this so interesting that essentially there is this, yes, exactly that breakdown. But essentially there's sort of this disconnect going on. The Dow, like you just said, is green. I was even looking at the Russell 2000. I don't know what it's doing now, but it was also green at one point this morning. So to your 2025 comment, I like that. I think you said the flavor of 2025. Maybe we're finally getting this divergence, which I actually think some of us are kind of exhausted from the same 7 companies, just basically collecting funds on repeat, free pass. So how about—
They're not all going away.
Not going away. Definitely not.
Well,
no.
Meta, no, I think not all of them are going to go away. Meta, Google, those names are still near all-time highs. So the thing is, we like to think about it. I didn't mean to interrupt you, but just the key thing is that Meta and Google are basically in communications and they are breaking out as well. So I think it's important to realize that some of them will continue to participate. And if anything, it's more an argument of forget about this concept of the mega caps and realize that actually they're not tech stocks. People say big cap tech, they're not tech stocks, and the market is going to start to recognize and distinguish between a company that gets its revenue from selling AI hardware and IT hardware and a company that gets its money from engaging billions of daily users. NVIDIA and Meta have nothing to do with each other if you really think about it, aside from the fact that they're both large cap growth momentum stocks. But when you take a step back, they are completely different businesses. And the market seems to be recognizing and making those distinctions.
Yes, and that would explain then while we have some of these divergences going on in the market, which I find fascinating because they feel rather hidden. I just don't see them on my social feeds. I don't have friends texting me about them, but some of these companies are going to highs like AT&T. I saw HubSpot. And meanwhile, here's the semiconductors. So the hardware is taking a hit on this DeepSeek news. What's sort of your analysis of this situation in this chart? And how about this chart, the chart we're looking at?
I mean, there's a lot of things to be worried about if you want to be long in this sort of sector. I think it's heavily owned. And the thing is, when you look at something like Texas Instrument, when you look at the price action in like On Semi, when you look at the companies like Applied Materials, Lam Research, these are the companies that are, everyone talks about NVIDIA and Broadcom, but then when you actually look inside of the actual kind of, guts of the semiconductor space, things like AMAT, these are the kind of leading edge names, the tip of the spear kind of names that are going to, like the providers. These are the guys that do the picks and shovels of semiconductors, and they have not been doing nearly as well. These could be giving some kind of leading indicators of weakness in the overall space. The fact that AMAT has not done so well, and if you look at a name like this, I mean, it kind of it peaked around the same time in July, but this is an area that's going to be more forward looking. It's like Halliburton or Schlumberger, is for energy. So I think this is actually telling us something as well. And I do think regardless of what industry you're looking at or what you're looking at in the market, looking at the suppliers, the companies that are the more kind of picks and shovels, kind of guts of the industry. Like if you look at electric cars, one of the big things that slid first in electric cars was ALB, which does lithium. So very often when you look at that, like, don't look at Tesla, look at ALB, things like that. And I think it's also interesting just to flip it over, but railroad suppliers have been doing really well, GBX and TRN. Now, these are more obscure companies, but it's interesting to see things like railroads starting to do better at this, and they follow those leading names. And here we see AMAT doing badly, and then we're seeing the stocks breaking down. So I think overall right now, semiconductors as a percentage of the S&P 500, stocks divided by SPX, has been a very high level here for a long time. I mean, this was the highest level since the dot-com bubble. And I think now we can, honestly, we can maybe, I hadn't looked at this chart in a while, but I think we can actually say now that this might have actually be at a spot where, it might actually be in a period of a trend. Now, this is a weekly chart of stocks divided by SPX, which will show the ratio. And so I think at this point, the S&P hit new highs and the stocks did not. So, at the end of the day, I think that the price action, the chart again is doing the technical analysis for us. It's interesting that the charts told us something like this before the DeepSeek news actually came. People were not willing to push chips to new highs, and I think there's been a lot of expectation that Blackwell is going to like change the world and everything. But again, it's not happening. There's so much expectation built into these names. iPhone is going to lift Apple, and the other thing happens, and Blackwell is going to lift NVIDIA, and instead a Chinese competitor comes out and crushes everything. So I think this is what things look like when you're at something of a turn, when the thing that should be happening doesn't happen. And then the surprises go the other way. And instead of, NVIDIA breaking out, Visa breaks out, Deere breaks out, Bristol Myers breaks out.
Wow.
This is what's happening now.
Wow. Can we see those charts, by the way? John Deere's up today?
Deere's hitting new all-time high. I did a scan today on TradeStation to look for some of the new all-time highs, and I was seeing things like Deere, Walmart, which remains fascinating. You and I have talked about this. I mean, this is a company now that is in many ways, maybe this is, Walmart was like, they did so much that changed American American business and the way Americans live. For whatever you think about them, there's this book called The Walmart Effect that's interesting. But the key point is that essentially Walmart has been such a kind of innovator of how business is done, and they've been using AI. They said months ago they had there was some comment they made about how they were using hundreds of millions of AI data points or something like that to improve deliveries, to improve offering products, what products they showed at different customers in terms of advertising and everything. This company has been really accelerating here, and I think this is a sort of name that's interesting. But also, I mean, it's been interesting to me to look at a stock also like, well, I mentioned MasterCard, but I'm sorry, Darden Restaurants, we did a TradingView idea on today. Actually, I think this is where's the chart from it? It was this one we did. All right. So basically, here's a company that has, they have kind of changed aspects of their business. We have this long basing pattern. And look at how the moving averages all lined up. So we did a TradingView idea on this today. And you basically have that short-term breakout. NVIDIA did not hit an all-time high in December, but Darden did. So, I mean, it's kind of like this made a high and held. NVIDIA tried to hit a high and failed. So I think I have it. Let me learn this chart. But anyway, the key point is, that was a rejection, and now we have a lower high. So I think when you look at this overall, there's a lot of nuance that could come out of a name like NVIDIA, and I'm not sure what to think of the chart itself overall in NVIDIA, but I do think that we're seeing here overall in the chip space and everything else that this is now at a spot where people are going to say, it's been a good run, and now I'm more interested in other parts of the market. And so I think right now the semiconductor, this converging thing, it went up to the top, it got rejected. Now it's breaking the bottom of this triangle. I think we have some support here at this low from kind of late November, but inside of a range like this, people could very well look for this range to widen, and we have other levels here that people might be looking for. So I think this is now something that is maybe more of some risk that people need to be aware of.
So I have to say, there's so much good stuff there. First, I want to say for everyone tuning in, the already 500 plus people who have dropped into this live show, is that there's a great quote about how show me the charts and I'll tell you the news. And that chart of S&P 500, the semiconductor index, which includes stocks like NVIDIA, and the S&P 500, like David pointed this out, which I thought was so interesting. This chart's been breaking down for quite some time. Today's move is almost just a reflection of this trend that has been happening. I did not know this, but I want to say using this ratio chart capability, I feel like is fantastic. And on top of that as well, which I think is just so interesting about this show, is that there's been so much focus on stocks like NVIDIA. And meanwhile, Darden Restaurants is hitting all-time highs today. I had to just look up right now who Darden Restaurants is. They own Olive Garden. So that to me is like a great kind of humorous story in itself, that NVIDIA, the AI king, is getting smashed and Olive Garden is at all-time highs. Was that what the chart was showing? Olive Garden's at all-time highs, basically?
I think it is. Is it all-time? It's yep, all-time highs today. And this is a sort of thing where I think it's important to look at short-term momentum and to look at what was that kind of catalyst in a certain period of time over, for example, in this case, what was the catalyst? What was the move or the momentum in the last, 3, 4, 5 weeks? And it was bullish, right? And I think we look at NVIDIA. If there's anything that stands out, the NVIDIA chart in the last 3, 4, 5 weeks, it was this reversal at this high, and then now this lower high. So I think at this point, there's some pretty significant damage to it. And I agree. And it's also interesting to look at how names like Cardinal Health, CAH, a name like this. These are just, healthcare has all kinds of highs popping up today. Stryker, interesting, this name. And now we talked some time ago about the hospital stocks. I want to put it back on people's radar. HCA and UHS. These companies are in a spot where they have, significant volume. And we were talking about them back here when they went to new highs, and then they've had several months of weakness. But when people might want to look at these again, because these companies are in some really significant growth phases right now. A lot of people are going to the hospital and getting stuff done, and it's what you'd expect as baby boomers age. People are going to be getting knees, they're going to be getting hips, they're going to be getting whatever, valves, all kinds of stuff. It's kind of like the just a real basic sort of kind of business activity that's lined up. And so I think the hospitals, there's a small number of hospital stocks that are ground zero for that. No one's going to talk about them, but they are performing.
It's just remarkable, this aspect that this is all going on under the surface. While I would say the majority of people watching this show, if they turn on the news tonight, if they follow market news shows, if they have something on, it's probably dominated by 90% of, this NVIDIA chatter. And then meanwhile, something else you pointed out earlier in the show was Walmart at all-time highs in what looks like a just fantastic chart. I had to look at Walmart's top market cap list. Let me just make sure I pull this list up really quick. I always like to see where these companies rank in terms of the top market cap. They're currently 12th in the world, which is kind of interesting that they're 12th, because there was sort of, like you're saying, this book about them. They've been, at one point, I think they were the largest company. They seem kind of sneaky as like a break back into the top 10. They have AI data points that actually move goods, that actually like move products, that change people's, people need some of this stuff to survive. So Walmart at all-time highs. I mean, fantastic observation, as well as Visa. Are you seeing any other all-time highs while all this other sort of drama is going on around NVIDIA?
Few popped up. Most of them are companies that people don't talk about very much. Things like VeriSign, but a lot of these I'm really not even sure, exactly what to make of. That's actually not an all-time high. It was a 52-week high. It was a scan I did, but things like AutoZone, um, um, O'Reilly Automotive. These have been steady growth, steady names over time. These auto part retailers. And then another one that was interesting is Abbott, ABT. So there's a lot of these. Whoa, I hadn't even looked at this one in a while. It's just on my list. But there's been a lot of
Wow.
these kind of like second tier kind of healthcare names all breaking out lately. And we've made the point that healthcare has been driving job growth in this economy. And it's fascinating to consider the fact that healthcare keeps adding jobs and healthcare stocks keep doing badly. But at a certain point in time, I mean, it's very simplistic and crude to say this, but it's not incorrect, which is that if you keep having people hiring in the healthcare industry, that has to mean that there's more business for hospitals, for device companies in particular, because if people are going to be working in a doctor's office, they're going to be something that impacts hospital volumes. It's going to impact devices. It's going to impact companies like Abbott Laboratories and BDX that makes things like syringes. So this is all the sort of thing that I think we're seeing here. And so I think that there's been a lot of fear in these guys because of politics. But at the same time, if there's any part of the economy now that's really growing, it's not just AI, it is healthcare. And that is, go look at those payrolls numbers, and we see consistent growth in the healthcare sector. So I think that's kind of my takeaway from this.
Yeah, super fascinating. And one more thing I'll add to that, because it's related in the sense that it's one of those things where in the moment the markets can sway you. It's DeepSeek, it's NVIDIA, it's in the news, it's all people care about. And you said something to me too right before we got on the show, which I thought was like just like it's such a no-brainer, is that there's a Fed meeting as well coming up this
Yeah.
Wednesday. And you just think about what the Fed could say and what that could do to markets as well. It's maybe you want to walk us through what you're thinking about in terms of some of those upcoming economic events, and even if you want to take us back to interest rates as well, please do.
Yeah. I mean, all right. So, well, all right. If we look at interest rates, I think actually the big story in these is that it's over. They're not going. I think they're just done as a narrative for now. As a catalyst, the Fed is going away. Macro is going away. And now we're getting into fundamentals. What is DeepSeek? It's a fundamental story. It impacts NVIDIA and certain companies in terms of their own inherent businesses. This is not a macro story anymore. So I think that is really the way to think about it. So to me, the 10-year here is not an overly, significant. This chart doesn't give me a clear sense it's going to go shooting down. I mean, it had this false sort of, breakout. And that's actually, something that suggests that a top could be in. But, I think we can see the 10-year drift, something like the dollar here. The dollar index got smashed down from this level. And this was a pretty significant drop in the dollar index. And, from my view here, this is something also that it could go anywhere you want it to go. I mean, there's a huge move here. It can retrace half of it and still have some downside. That could be a positive for precious metals. My view here is that looking for macro is not where you're going to get your actual thing. I think the Fed is fading. We have the Fed on Wednesday. We have GDP on Thursday. We have PCE inflation on Friday. And my suspicion is that none of them will be very important in terms of where the market wants to go. But I got to look at the Russell, because I think people have to realize is this idea, oh, that we're not going to be buying the Nasdaq, we're going to be buying the Russell, and there's this constant like drumbeat about the Russell, and it has not been showing what people I think really would want to see. To me, this remains on the weekly chart a troubled sort of pattern with this downtrend that has stayed below. And I think the thing that really matters here is the IWD divided by SPX. Or we can do IWD divided by SPY. It probably would give us a cleaner ratio.
What
But
is the
this is
IWD? I'm actually not too familiar. And first time we've talked about it on the show. For all the viewers here, we're already almost about to near 1,000 views, by the way. That just tells you NVIDIA and DeepSeek was like, what's going on in markets? But for everyone following the show, you'll find that David and I often have these reoccurring symbols that we're looking at. Like you mentioned, the 10-year treasury rate, even with some of the technical indicators you'll find. But IWD is new, so I'd love to hear about this and explain it to all of our returning viewers.
it's value. It's the value index. This is a ratio of the value index IWD against the SPY. So this is going to be stuff like Procter and Gamble and Philip Morris and financials and industrials. It's not going to be NVIDIA and Meta. And you can see here going back to July, something happened in July when the chips got crushed. And there was a lot of people looked at this, and I think it's just interesting here that at this point, the thing that really stands out to me is the fact that IWD is mostly S&P 500 companies. It's not the small cap companies that are kind of more obscure, but it's like the industrials and financials. And I think that is really kind of where the attention very well could be now. It could be in particular the things like value. And if you look at IWD, actually this is the more clear one, IWD versus IWF. This is value versus growth. And if you look at this on like a daily chart, you see it's a pretty significant jump today. So, this is something here where it has really gone down to all-time lows. I'm sure it has never been this low before as a ratio going back to 2000. So basically, this shows that growth stocks have hit an all-time high against value stocks. And now, when you look at where semiconductors are and everything else, we could be actually setting up for an area here of a longer kind of outperformance in the kind of value, or at least a period here where we see another shift toward value that lasts a period of months. And I think that's kind of what we're seeing in the charts. That's why we're actually seeing the Dow positive today. That's why we're seeing, a lot of new companies hitting 52-week highs today. We have more than 20 companies in the S&P hitting new highs today. So to me, that's what it tells us. And I think that, IWD versus IWF, great thing about TradingView, you can just make these ratios so easily. And that's essentially, I think here it's holding this all-time low. And so this to me is kind of significant, and we might want to kind of bear it in mind for the coming weeks. And I think in particular, it has implications for financials. I want to point out that Berkshire Hathaway to me is kind of, this is not a super active stock. But here you have a name that is essentially, it's been moving sideways here for a long time, and they have a lot of cash. So the fact is they have been selling Apple, and they have not been buying a lot of these tech stocks. So we might actually see them start to deploy money into this new environment. And this new environment could be one where things like Travelers, which is property and casualty, does well. Look at a name like Regions Financial. They had a good earnings report, and they've held this level here. And the banks overall, things like the KRE, the regional banks, also here at this level, they're very much holding this tight area. There's an area that's going to potentially benefit, or people expect, there's an expectation that they're going to benefit from regulatory changes under President Trump, the banks here. So I think this is kind of what we're seeing here. And in many ways, this fits into the overall narrative of what people expect. And I think the idea of a shift toward value, the idea of people moving away from just the kind of big mega caps and looking for other parts of the economy. That's essentially what, in my view, seems to be happening here.
And for the new viewers on that concept, and just because it's important to educate those who are new, looking to learn something new, and also those who, even if you're experts, you need a refresher, maybe just remind people about what the word value means in this context. Because I do find that we have been in such a growth stock sort of trend the last few years. I think people forget what a value stock or company really is.
Well, theoretically, value companies are companies that are undervalued. That's what the textbook says, going back to a guy named Benjamin Graham back in the 1930s. And his idea was you want to buy, stocks that are undervalued. Growth stocks are stocks that are getting bigger. They're in a business that is going to be significantly bigger in 5 years than they are now. Their revenue, in theory, should be bigger in the future than they are now. And a classic book on that is How to Make Money in Stocks by William O'Neill. And so that is growth. So the idea of growth is buying Amazon in 1995 and watching it go from little tiny thing to multi-trillion-dollar company. That's growth investing. Value investing is buying some company that is cheap and should get better based on some kind of model or valuation metrics you have. That's the theory. Now, the reality of what value stocks is that it is basically industrials and financials and healthcare. So that's essentially what it is if you actually want to think about it from that perspective. And I think a lot of the actual concepts of value and growth, in many ways, these are old-fashioned concepts. And in many ways, the rise of sector funds like XLK, XLI, XLF, in many ways have undermined the relevance of growth investing, because people can focus on individual sectors and individual industries like chips and stuff. And that was not true 30, 40, 50 years ago, when a lot of these things came into, like 50 years ago, these things came into existence, when you'd have things like a growth portfolio or value portfolio. So a lot of these are kind of mixed over, but essentially what value means now is essentially financials, industrials, healthcare, and consumer staples. That's essentially what value is, at this time.
And it's interesting because that takes us back to what I think is still a great line you mentioned, despite all this NVIDIA action going on, that maybe it is sort of a flavor change for 2025. And the flavor change is that maybe people are willing to venture out there and find new companies, find new potential stocks that are interesting, not stay within the realm of sort of those, same 5 to 10 companies. And value is kind of interesting because, as you were just demonstrating, it's been out of favor. So maybe if there is sort of this, new crop of companies that could be, getting everyone's attention again, or interesting to follow or trade or track, it's, either something you've never heard of, or it actually falls into the value basket, not the growth basket. And you mentioned financials, and you've already showed us that Visa was at all-time highs today. I think you showed us that MasterCard was at all-time highs today. Have you been looking at the banks as well? Because I was wow, look at that MasterCard chart, by the way.
Although I would tell you one thing that's a funny thing that most people don't realize is despite saying this, MasterCard and Visa are tech stocks.
Interesting. What do you say that?
They are tech stocks. They're in XLK. They're not in XLF. So but it's strange, and I think that maybe what I said is kind of an idiosyncratic thing, but it's just so you know, technically even though in many ways they behave like financials and they are philosophically financials, they are in the XLK because they are essentially fintechs. I mean, maybe they shouldn't be there. You can debate that, but just to be clear, they are actually in that. But yes, the banks here I think are interesting in the overall financials, like the KRE, BKX. Now this would be interesting. At one point we did a TradingView idea of BKX divided by SOX. And we did this over the summer. And I'm trying to think of how we did a TradingView idea on this, and it is interesting. This is a weekly chart showing this, but I think it's just interesting to see that. Look, July, it was the middle of last year. We might look back and say this was the time when the world changed. That massive top in semiconductors right around here. Basically that was when the stocks hit that high. And then it just crashed in July. And that was when you started getting a bunch of stuff here, when they started cracking down on the exports and all that stuff. It all happened through here. And then semiconductors crashed and they never went back to new highs, and the broader market did. And I think that also kind of told you something, that, here we were in July, in October, the S&P's hitting new highs and the semiconductors was not. So that was also something I think I told you. Now, there were reasons to think here that this could have basically gone on to make new highs, that it was going to, basically escape these higher lows and break to the upside, but it didn't. So I think at this point, this is now something that becomes perilous on the long side. It's something where there were people expecting, and I think one thing to be careful is something like this. Now, the semiconductor index there's a lot of people who would have been buying in here and building positions, thinking that this big takeoff was going to happen. And then when it didn't, it actually creates some potential, I think, now of this becoming really a topping pattern, And so I think now people, I'm not the only person probably seeing this. So I think we need to realize here something like semiconductors here could be something where people want to really get away from. So I think that's kind of my point about chips at this time.
It's so interesting to me too, just how much interest we people have in chips right now. Even in the chat, someone's asking about the company, the ticker, sorry, AVGO, and it's just something that continues to fascinate me. That, and don't get me wrong, chips are critical, and there's the even the export restrict. Wow, look at that. That's
That's
wow.
Broadcom, yeah.
So I have to say I'm a sucker for a gap fill, and that looks like that gap fill wants to be filled based on
Yeah.
wow.
I gotta say, I think the fact everyone wants to talk about it, that might actually be your warning sign, because it's something now that is such a well-established story. And growth stocks, the whole point about them is there is a novelty to them. So my point about these would be that when you look at the way growth stocks normally trade, um, I think the point is that there's a lot of money trapped in them, and I think that if they are kind of broken, once they get broken, they can remain broken for for longer than you might think. And so I think the problem now is that if these names are essentially no longer the exciting thing, there's going to be, there's the risk of them really struggling for longer than you might think. And the thing is unlike a value name, you know, when you people think, oh, it's still a good opportunity at this level or something like that. The thing is, if it's not great and it's not doing awesome and showing amazing growth, and if we don't have a degree of confidence that the next few quarters are going to be really impressive, then basically they can get spurned. And I think the risk with growth stocks here, and I think that's the thing to be careful with something like this, is that if people sense that in 2 quarters the news is going to be worse, that is not what people who are long-term growth investors want to know. So I think that this is now an area that is there's a lot less certainty toward them after we get this Chinese news. I don't know how anyone knows how to parse something like this. So on one hand, that the strong Chinese AI model might mean that America has to work harder, and that's going to mean more investment. But it might also just mean that people say, why on earth, are we paying for this? And maybe we should do that. And maybe they just go back and they start scaling down. But I think the overall expectation of the market is telling us here is that the likely response to this is going to be that these aggressive capex expectations are maybe actually too high. And I think at the end of the day, that's what growth is going to react to.
Yes, I saw some interesting information that exactly the real thing from the DeepSeek news is just the recalibration of the whole sector. It's not going to be as smooth sailing as officially thought of like purchase, 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 need, we need more chips, more chips. Now it's sort of getting re-rated to some degree. And I did see some people try to talk about Jevons paradox. I don't know if you saw any of that about Jevons
No.
paradox. Something how actually if you need something like oil and it's for, very important things, movement, energy, warmth, cars, that actually by the price going down, you just consume more of it. And so the bulls are out there. I saw trying to say that actually this, this efficiency now in chips that is going to happen. It's just going to lead to Jevons paradox, which means we're going to consume more AI for cheaper. I don't know if that's true. Just an interesting counter argument I had to consider. But on all of these chip moves as well, I did notice that, and you said something that's I think rather important too. You said that when these growth stocks fall out of favor, it takes a long time. There was someone had posted a chart of HubSpot, and if you pull that chart up, that was once a growth stock, but now weirdly enough, it's another company that seems to be coming back in favor. If you really zoom out too, it's so
Yeah.
interesting. They haven't been this high since 2021, and yeah, just this whatever is going on today is just fascinating to see that a stock like this was kind of dead money for some time there, dropped to the lows, and now here it is. It's back near its all-time highs. I don't know what to make of it all, but it's just a reminder that when the growth stocks do sort of fall out of favor, it can be a long time before they get back to those highs.
Yep. Well, I think this is one that was it was your classic sort of blow off back in late 21. My first thought is that this is not a member of the S&P, and people might say, you know what, over the longer run, it's headed in that direction. Another thing is that essentially here there are software companies that are doing relatively well. I mean, ServiceNow also is doing well today, and this could be something
Wow.
now
Is
where
that an
there's going to
all-time
be
high? David's
Yeah, hit
starting
an
to look like
all-time
that.
high. It did hit
Jeez.
an all-time high, but this is something here where it's not clear that the DeepSeek news is necessarily bad for a company like ServiceNow or a company like HubSpot or some of these other software companies. So I think you got to recognize, this is what I mean about we're at a spot now where growth is not necessarily it doesn't mean that much, because you do have a stock like Netflix, which is a growth stock, and it's still doing pretty well. And so I think Meta and these names are not the same sort of companies, and maybe if anything, maybe people like, because people, this is, just something to think about, but maybe it actually means they're not going to spend as much. Well, if they don't spend as much, then that means that's actually a positive for net income. So I think that, there are arguments here. It doesn't just blow up the whole NASDAQ, but I think it does create this risk, in particular for semiconductors and a lot of the companies associated with that. And that does include certain industrial companies like APH had a really strong week last week. And there's this whole thing of AI driving that. This company makes cables and stuff and data center equipment. It got hammered today on this news. There's a bunch of industrial stocks that got hit on this news as well. So I think that's kind of noteworthy. Now, speaking of Netflix, I did want to just mention here and just some individual charts. I mean, it's very interesting. This is kind of under the radar here, but people might want to be thinking about setting some price alerts here and just seeing, this might be one that just kind of drifts a little, and maybe we get like one day when it like kind of creeps down toward like 940, 945, and people might look for it. But this has been one of these also communication stocks. It's not necessarily, I mean, anyway, a problem with AI, a name like this. And so this is also, if you want to be owning growth stocks, and some people are growth investors, and you need to get out of Netflix, maybe the names you look toward are these communication names. It allows you to stay true to the growth theme, but at the same time, you're not catching a falling knife in chips. The other thing I think about chips is that basically it makes me wary when people make value arguments about growth stocks and they say, oh, it's cheap now. And it's like, that's not why you buy growth stocks, because they're cheap. And the thing is, if you look at the history of growth stocks when they get bad, like Hubs or and these other names, when they got bad back in 22, they got cheap and they got cheaper and they got cheaper and cheaper the whole way down. And saying, hey, they're cheap doesn't really mean anything in the growth stock. People are buying them because they want to know that in 2 to 3 quarters out, that the business is going to be bigger. And if they have the sense that it's not going to be bigger, or it might be smaller, that the next news is going to be, oops, guidance cut, that is where the charts are going in those names. And that is what seems to be manifesting in chips. And I have to go back to AMAT, because to me, this is telling us a lot. The inability of Applied Materials to even get close to its old highs when the other chips did. This is, to me, an interesting warning sign. I do think people should kind of think when they look at things, these kind of relationships. If you look, don't just look at energy stocks, look at Halliburton and then look at oil. Look at, Greenbrier and railroads. Look at the companies together and realize kind of which are higher, like ALB, on a weekly chart. This is a lithium stock. I mean, it started falling, before Tesla did. I'm trying to think. Tesla obviously rebounded recently, but ALB, through this weakness in Tesla on the weekly here, ALB was falling before it. It was falling before this knife down in Tesla. So anyway, I want to just point that out, that it's important to kind of break things up into these different groups and recognize that the leading company in an industry or sector can tell you something about what's going to happen. So sometimes the bigger names, like AMAT is smaller than NVIDIA, but in many ways it can give these kind of signals.
And I have to say, David, this is exactly why this show, I think, is so critical, and why it's such a treat to have you on the show, as well as you publishing these ideas to the TradeStation account too, because of the level of insights and access that any trader watching is getting. And I love this concept of looking for the tell. So AMAT was a tell. That S&P 500 to, I think, SOX ratio you showed earlier, that was a tell. It was breaking down before any of this NVIDIA news was showing up. And I really like that insight. And it's such a reminder to how proactive you have to be in markets. Like, you can't just see something and think now it's going to the moon. There's all these tells and signs around you that you should go investigate first, because someone pretty smart might be ahead of it and and is expressing their opinion in some other corner of the market that you haven't fully investigated yet. And someone actually in the chat is asking us about something that's going to take us a little off topic here, but maybe still connected. And they were wondering about what you think gold and the dollar potentially mean in this type of environment, with either this rotation going on or just the sell-off that's happening across AI.
Yeah, I've seen the move in gold, and I mean, you have here the potential of a breakout, and I think that that is something that is somewhat in play. I'm not sure that it has the real significance yet, though, because, like I said, my expectation is that, or I think that the market doesn't have a really strong sense that we're going to see a real move one way or another in rates or in the dollar. So I think right now, it is in an uptrend, and at this point in time, I think people are going to look for a breakout to that old high that we did not get, and this could be something that simply forms a long period of consolidation. I think if you are bearish on the world and geopolitics, then it could make more sense. My expectation is that there's a lot of fear out there right now, and that things might actually not go in a bad direction. And so I think that overall with gold, there are uptrends. I mean, there is an uptrend in place, but I think that the macro environment it's not massively favorable for it. Earnings are expected to grow triple digits this quarter and the next 2 quarters. We're in an environment where oil is not doing particularly well. Energy continues to look troubled. And I think that at this point in time, the Fed is probably not going to get super dovish. So we're in a spot here where I think the macro doesn't really favor gold. And from my view here, that people might want to simply look for this to recognize that it's kind of stalling at resistance. It had a nice run up, and maybe that's what we get for now.
So once again, this is why this show is great. And there's two things that just popped into my head. One of which I was meaning to ask you about just in the last segment of our conversation, which was the aspect too that some of the software stocks, exactly, they can benefit from this news coming out about DeepSeek and NVIDIA and making chips more efficient, because now their access to AI is way cheaper. So if you're a software stock and you're paying X amount before for AI tools, now you're paying a fraction of that. So you're getting the same efficiency, the same capabilities for less and less money. I even think about small caps where previously, they couldn't hire some world-class engineer. Now it's sounding like the price of a world-class engineer on AI is almost, it's going down because they're having this cost race. And then lastly, about oil, that oil comment you just made was interesting too. I just saw that in my town, and I don't know where everyone lives, but the oil's going for under $3 a gallon now, which I don't, it's been some time before I saw under $3 a gallon, which is really nice on a consumer's pocket.
Yeah, I'm putting up Tesla. I mean, to me, I've looked at energy a lot, and the energy, the XLE here on a weekly here, there's been some patterns I've been watching, but we have a lower weekly high, and I think we got to just realize that lower weekly highs, that might actually see this weekly low. Well, it might mean that we get a lower weekly low. So my longer term structural negativity on energy remains kind of in effect, and I think China remains in a very difficult spot economically. And I think it's one of the reasons here where, just being bearish on stocks and looking for gold and stuff to do well might not really be the place to be. I think we're in a spot where, yes, semiconductors are definitely, people can raise questions about them, but we had a very significant breadth thrust in the last 2 weeks in the S&P 500. We saw a very significant, you guys, I don't have time to get into it now, but if you go to my blog, we wrote about how we had a very significant shift from very kind of fearful sentiment to very bullish sentiment. It was really a kind of historic shift. Doesn't happen often, and we write about it on my blog. And so I want to just point that out. There are some things here that are more consistent with the market continuing higher. I do want to just very quickly mention here. I was reporting at Tesla reports earnings soon, and I do think it's interesting that there might be some potential here for this to be in the midst of a kind of corrective phase. But some others that were interesting to me was Wells Fargo after earnings, basically going up. And at this level now where it's at that kind of all-time high, but the fact is it's holding there pretty tight. So this might be something where people, it might take a week or two, but this might be something where people look for some, kind of continuation in a name like Wells Fargo. The other name I wanted to get on, I'm watching is Boeing, because Boeing reports earnings soon, and there might be some signs that finally, after many years of trouble, that Boeing has actually kind of started to resume shipments and things maybe are actually kind of coming back together. A lot of bad news is now kind of has passed in Boeing. They've had that strike and it's over. A lot of these things seem to be ending. So Boeing reports earnings soon, and this might be a name that people want to take a look at. I will also mention that if there is an idea of a value name or a comeback name or something like that, this is the kind of market. If people are moving and they're exiting NVIDIA or they're exiting these massive chip stocks, names like Boeing that are long-term sort of comeback plays. Some of these others, I haven't looked at them recently, excuse me, names like Walgreens Boots and CVS that have gotten really sold off for a long time. Some of these people might look at. There's a time we actually did a TradingView idea on Bristol Myers, and it's basically kind of done that as well. So I think that, some of these areas here, people might look for these beaten down, but I don't know if they'll call them blue chip, but they're kind of blue chip and beaten down real companies. These are not like random, small companies. These are major corporations that have been struggling for years, and that if money drains away from growth, they can look for some of these turnaround stories. And one that doesn't get a lot of attention, but I did want to point out, was Pitney Bowes. I mean, this is a crazy stock that makes like postal meters and office equipment, but it's had a significant turnaround for a while. So this is just a name of, it's fascinating to see a company like this exploding higher on a day when NVIDIA is getting crushed. So I think we're seeing some of this sort of stuff of people shifting toward these other areas, more of a stock picking environment, less of a kind of overall just, buying the index and hoping for the best.
So it's so funny. People are probably going to hear you say Pitney Bowes and be like, "What the heck, Pitney Bowes? That chart, it's ripping." And I have to say though, those are the insights like you have to look for, because just a chart like that also illustrates the changing work from home sort of process. Like that, I just read that I think J.P. Morgan is going back to 5 days a week, and sure enough, there's Pitney Bowes. Well, they must be expecting a new orders going into the future for all of their office supplies, and that is to me the most fascinating thing about our chat this month, especially on a day where NVIDIA is setting a sell-off record in terms of losing 500 plus billion in market cap. That amount's never been done before. Everyone's sort of thinking like the market's just, it's over. It's going to the bottom. And meanwhile, Pitney Bowes, a company that makes office supplies, is hitting all-time highs. So many gems on our stream today. And just so interesting. And actually, you might even want to pull up JP Morgan if you find that interesting, because their chart was quite strong as well.
Interesting, yeah. Well, see, this one is I'm looking at the opportunities in this, and I don't, at this point it's kind of sitting there, but exactly, this is exactly what we're kind of talking about. And Travelers and Regions Financial and a lot of these sort of names. And I have to say, I remember what the market did in 2001 and 2002, when the tech bubble broke. There was this shift toward these kind of value names. Anything that was non-tech became really cool, and there was this almost loathing of tech, and so I'm not saying we're at a spot like that. And my view would be that this would be something that, if we are still in the midst of a bull market that has a few years to go, that there could be another period when these big names move higher. But we could enter a phase that will last several quarters when these non-tech names do well. The thing I'll say is, last year everyone expected it was going to be the year of rotation away from tech, and then basically NVIDIA just had another crazy year and things were amazing. But maybe that expectation of looking for rotation, if we look at something like the RSP, which is equal weighted RSP versus S&P, maybe this expectation was simply premature. Maybe it's interesting to just kind of think, maybe we had to have that blow off that we had in July, and now we kind of look back, and the fact that the market has been making new highs despite the fact that the chips have not. And I think that's maybe the kind of incredible move NVIDIA had. It doesn't just end quickly. Maybe it needed several quarters to really stall out, given the fact that there was such a high conviction in it.
Super, super interesting. And, one thing we should come back to, I know the market is closing in 4 minutes. And so I don't want to maybe take us past the close. So I do want to hand the mic off to you for this. And by the way, everyone, remember to follow TradeStation on TradingView. Everything you're hearing on this show is, being created and posted and delivered right on their official account. Just deep insight after deep insight. Let me ask you just quickly about how we wrap up the week, if you want to just rehash some of those upcoming events. Because once again, if you're just jumping into this stream, there's a Fed announcement on Wednesday, and you mentioned GDP as well. Maybe leave us with a note here before the market closes in a few minutes.
My expectation is the Fed will be the most important thing. I think that, but my expectation is that it won't be very big. I think at this point in time, the Fed has done their work. They hiked and they cut, and now we have to kind of see what happens. My expectation over time, and I think there's a lot of data to support this, is that essentially we're seeing downward pressure in inflation because rents are going down, and I think that trend is kind of clearly established. People thought Trump was going to do 60% on China, now he's going to do 10. So this horrible bad news about tariffs is not panning out how people thought. I would say the Colombia tariffs got some attention, but that was really not a trade dispute. That was an immigration fight, and tariffs were kind of the tool he used. So even though it was scary, it wasn't focused on the real. No one, I mean, Colombia is not the importance that China is in terms of tariffs and what it would do to inflation. So I think the thing is, we see that, and then speaking of China, despite DeepSeek, China is struggling, as an economy overall. So that's deflationary. You have the lack of really aggressive hawkish tariffs from Trump. That's deflationary. We have the downward pull in rents. That's deflationary. So I think you put these things together here, and we could be in a spot where the Fed basically pauses for now, but as people look forward, 1 to 2 rate cuts could still be in the cards. They predicted it this year. Things are playing out decently, and the real thing, despite what everyone else talks about, the real thing is, what do we see in rentals? Because that remains, rentals and owner's equivalent rent, that is the driver of inflation. And if that continues to moderate, it puts us in a spot here where people could start to look for, that kind of overall benign environment. And the thing is, that can start to foster M&A, it'll support financials and these other parts of the market, things like real estate, housing, all those things can kind of gradually start to participate. And I think we don't really know what will lead. And that's why we want to be looking at the charts. We want to be looking at relative strength, looking at who's making new highs and who isn't. That's important. Who tries, like NVIDIA, and fails. That is, I think, important. And look at who succeeds, like Visa and MasterCard and Walmart. So I think to recognize that, and it doesn't really matter what you think. It matters what the chart is telling you. And I think that's the key thing. I mean, people might say all day long, who cares about CBRE? It's a real estate management company I just showed. But the fact is that the market does care because it's hitting new highs, and the stocks that everyone wants to own are not. A lot of them are not. And I think ultimately it's going to come down to letting the charts really guide your opinions, and not let your opinions guide your interpretations of the charts, because then you'll just, you'll miss what the market's trying to tell you.
And on that note, your opinions aren't going to move the chart, right? You could have the strongest opinion. You could have, you could be sending good positive energy out there, but it's not going to move the chart. The chart is living in its own world. And David, wonderful way to summarize, especially on the rents aspect dropping, just macro level, rents dropping, gas dropping, so interesting. And I just heard the closing bell. The markets are closed, ladies and gentlemen. We'll wrap it up there. David, thanks for being on the show, and thank you to Ethan in the chat who tells us perfect day for this. Perfect day for our chat, for our podcast. I have to say, I think that we should try to schedule our shows more often around these events, because the feedback in the chat is great. So awesome stuff, David. Once again, everyone, follow TradeStation on TradingView. You can write comments on TradingView ideas. You should just write, leave a comment. You're meeting the man who runs the account right here. So it's really like direct access. Can't get that anywhere else as far as I'm concerned. So thanks a lot, David. And everyone, we'll be back next month, and we'll dive deeper into some of these topics.
Great to see you, Steph.
See you, David. And thank you to all of our viewers. Excellent shows. Great hanging with everyone.